What's up, guys? I think there's some correction we need to make here. We were looking for bullish move on Euro USD, and I just feel like something is off a little bit technically, and I'll wish that we have a look at it here before it's too late. Now, look at this structure. We wanted to go bullish on this is let me go to the Euro USD. We have been looking for a bullish move to the upside. And let me just this. We wanted to get a push to the upside on Euro USD, and this was our area of interest. This was our demand that had been tested. Just price tapped into it and went away immediately. So we went on the lower time frame, all right? And now, and we were able to get a change of character. This change of character here, and we were bullish. So we were able to go up by at least around something around 90 pips. And price started going back. So there's a way I'm kind of believing that we are likely to be kicked out at some point, because remember, technically as well, fundamentally, of course, we are expecting to be buying, but technically, I think something is off. So allow me to remove this one here and show you. There's only one level that I'm watching to see how the price is going to treat that level. And the level is this one, right? This for 4-hour or B. If the price is going to break this for a order block, I think we're going to get this market to come and mitigate this daily demand very well again. Because if the price doesn't respect this level and go higher this order block, then there's no way this level, anything else below, gonna hold. This means that this market is likely going to go deeper, all right? And you're likely to even go deeper to mitigate this particular candle, this down close candle here. That's just my thinking. That's why I'm making this video. We are likely to push lower to mitigate that area. So if you're likely to push lower to mitigate that area, what is my point? My point is that that trade that you are holding, I've already closed all my trades that I was holding at break even, because I was like, okay, this market is likely to push lower, right? It's likely to push lower and mitigate the deeper or be here or just this area very well. So the reason I'm saying so is because let me just clear my chart. We'll start over again. This is the chart that's cleared. Let me go to the Euro USD as well. I show you something here. When you go to Euro USD, there's something here. There's something on Euro USD. This is where we wanted to go long. So let me just clean everything up like that. So we are seeing this, yeah? So when you look at this Euro USD, you're going to notice that we have this, area. This area has not been mitigated very well. It has not been mitigated. When you look back here, there's a good space. We are not mitigated. But when we go to the EC, the Euro future, we realize that here, the level was mitigated. This is a level, and this is what I'm looking at. Okay. If I go with the body, I think the wick is when you get the mitigation. But I want to work with the body, because the body is a bit sharp. So I realized at this level, I did not check well. I realized at this level now they are not mitigated. But let me just do the overall analysis fundamentally, so that we can be able to have a good understanding into this here. So I'll go the weekly time frame, and I would wish that I check the contracts, but I want this video to be short. About the contracts, I'll find time and make the video about the contracts. Now, Let's try to look at the commercials COT report, how the price has been behaving. So look at this price here. Let's just get our commercials of retailers. We see that retailers here, they are very, very bearish. They are really, really selling. And as well, they're just chasing this trend of that trend to the downside. So they are bearish. And that's why you see every time they were bearish, price could go higher. Like right now, we see they are bearish here. I'm expecting a push to the upside. Again here, they were bearish. Look at this area. They were pushing down. The price went higher. Any point they were bearish, was it? Again here, you see they were bearish. Let me just go into this area. Deep price took the opposite move. Again here, you see. Again, lastly, here, bearish. They were bearish here, price went higher. So you see, every time they try to sell, the market responded negatively. They try to sell, price goes higher. So here they are selling. I know that we're expecting a push to the upside, all right? So that's how the retailers are behaving. And you look back, even if you go back to in history, you see every time they were trying to look for a sell, every time they are selling, the price will respond negatively. So this tells me that commercials are what? Commercials are bullish and they're about to step in. And for you to see it, for you to be able to see it, you can look at this COT again. Sorry, not this one. Look at this one, the commitment of traders report, and I'll just put off the retailers and leave the commercials. You see commercials, you have seen the retailers were bearish, now commercials are doing the opposite, they are bullish. And I want to see every time commercials, they were bullish, what was happening. Here they are bullish. Again here, they were 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 bullish. And I want you to see what's the response of the market to the upside. Again here, they were bullish. And again, lastly, let's choose this one. And we close with this area. We want to see that on this chart, every time, every place I've shown you, you see the price was bullish. And this is a weekly time frame. This means that even if you see one candle, this means that in a good 5 days, the market was moving in one direction. So you see the market, commercials, and right now you see commercials again, they are bullish, but the market structure looks bearish. This means that we're expecting a push to the upside around this area. We're going to get a very good bullish move to the upside. Now, let's look at this area. Let's remove the lines and the indicator. So that we have seen that commercials are bullish. Now we can change their contracts into an index so that you can see very well at what percent are they strong. Now look at the percentage here. We see that they are very, very bullish and retailers are just down here. So smart money are the commercials who are bullish here. Smart money are very bullish. Retailers are very, very bearish. And you can see every time smart money were bullish, the market was supposed to, like here, they are bullish. Where they are bullish and the market is bearish. This means that we're expecting a push to the upside. I want you to show you somewhere else. Look at this. Every time they were bullish, that's where the market went higher. Again here. Where is it here? They went higher. Again here. I'm just plotting every time commercials were participating in the market were up here. The market was pushing higher. And also retailers are just on the other side. So look at this index. We see that commercials are 100% bullish. So this means that we are only left now to check the valuation of this this particular the future of the euro. So what valuation? When I go to valuation, I want to look at actually against the dollar. So I'll just close my how do you call them, my as you can see here, we have DXY symbol 1. Most people use DXY, so we have DXY here with us. Then we have number 2, this is the gold futures. Then number 3, we have the treasury bonds, as you can see. So I just want to use DXY alone. So I'll remove treasury bonds and gold future. I want to see what DXY is going to do. So when you look at DXY now, I see this where I went wrong. I'm seeing where I've been wrong, why I took an early buy setup and I was wrong, guys. I apologize for misleading you for that. That's why I'm here to correct. So the dollar is not undervalued, but it's approaching that level. So either today or tomorrow, we are going to start buying the Euro USD properly to the upside. So you're going to realize that the moment we're hitting this level, there's a chance that we'll be looking forward to go to the upside. So I really want to see this one to cross, maybe today, later tonight, and probably tomorrow we'll start looking for a push to the upside. So you're approaching undervalue, and that's what I'll wish. You can see like last time, we just backtest. Every time we're undervalued, what was the response of the market? Undervalue will get the market to push higher. You see, when you're undervalued, this is what the price will do to the upside. Every time you just approach undervalue or almost there, you see here, we are almost there. Not exactly, but the price went higher. As long as fundamentals are supporting it, but you can see we were undervalued here, but it took some time and it just hit this level. Yeah, and you got the push to the upside. In the area again, we were undervalued and you saw the push, like here you see, price went higher. Every time you are undervalued, price will just respond. For example, here, you see what the market will do. Okay, so I want to see only places where we are undervalued. I'm not checking any random place, only where valuation confirmed, like here. You see, like here, around this area. What was the market responding? You can see the market went higher. This is a weekly time frame, so it went higher, at least for 1 week. 1 week, this is the second one, the third week, the market was bullish, the upside. Again, lastly, let me give you the last confirmation of undervalued. We're looking using the dollar. We are here, right? You see undervalued and the price went higher. So you see, when we look at these things, again. So we can see that when we look at the dollar, we realize that we are not yet undervalued. We are just approaching that zone. So I really want to be patient until the dollar is undervalued. Then I look for a push to the upside. That's what I'm having. So let me just do this. Let us remove the lines we have drawn there. I want to say something. Yeah. Let's see. I do not want to put the treasury bonds here, but you can still put the treasury bonds. There's nothing really good. Let's see. You see, I don't want to follow the treasury bonds. I'm following. No. Sorry, guys. I apologize. I'm on a weekly time frame. Let's go to the daily. Why am I doing these things the not the correct way? We are supposed to use evaluation on daily time frame. Let me redo it again. Yeah, I want to see the how do you call this? Yeah, the valuation of the dollar undervalued, guys. Yeah, I don't know what's happening with me. Little bit confused, just a little bit, man. Forgive me. So I want to see, you can see that here we are undervalued. All right, we are undervalued. Sorry, I was using the weekly. That's why I did not change the time frame. That's why you see the weekly we are approaching there. But on a daily, we are undervalued, and the daily is the proper time frame to use. That's why you see when you are undervalued here, I'm expecting a push to the upside. Let me show you the areas where we were undervalued. That was the weekly. It takes a lot of time. Here, price went higher. Here, price went higher. Here, price went higher. And here, again, almost there, price went higher. Every time we're undervalued, you expect the push to the upside. So look at this area. We already hit. We're just coming from undervalued and we're pushing to the upside. So commercials or smart money, everything has confirmed that we are bullish. We are a bullish here. So the only thing that is remaining, the only thing that is remaining for us to push to go to the upside is to look at the cycle. The cycle. We look at the cycle here. We're expecting the push to the upside. but you see that we're going to get a little bit of a bottom, small drop before we go higher. So I'm expecting overall move to the upside, but at this time we must see we might get a bottom there. So when I look at this now, this is a euro future, and I'm looking at it. I'm seeing things happening here. What I'm seeing here is the daily time frame, and on daily time frame, I'm looking at this level that is supposed to be mitigated. So we are going to get a push the upside, and I'll want to see now. Place my entry here, put my stop loss just below here, and I'll be targeting anywhere 1 to 3. 1 to 3 is what is this? 1 to 3. So that is one. It again. What's up? What is happening? I wanted to do something here. I was setting. Okay. This is risk reward ratio 1. This one will be the stop loss. The stop loss. Why is this machine not responding the way I want? Let me do it again. Okay. Yeah. 1. Risk reward. This then 3. Risk reward. Why? Why do you have this? Why am I having a problem? Two, three. So this is my 3 risk reward ratio. We'll be targeting there, 3R, 3R around that place. So when I'm having that in mind, then I'm just going to place my buy limit and I'll wait for price to activate my area. So I'm looking forward to go long there on Euro future. So let's go to the Euro USD and correct against a few things there. This was a blunder, man. This was a mistake. Now we're here, we close. So you see when I clean everything here, this is the Euro USD now, the currency, Euro USD. You can see Euro USD. In Euro USD, what I'm looking at my level technically. This is the area. And I go with the body right there. So if I'm going to go with the body, then I'm going to place my buy limit here. Stop loss. The way I work with the stop loss, I do this. Look at the overall position. Then I'll move it here. So whenever I'm risking, I'm taking a half of that zone. Then I'll take the quarter of my stop loss as a level whereby I'll extend my stop loss to here. Around here, yes. So that's where my stop loss is. And I'm targeting 1 to 3. That should be enough for me. Okay, there. That's where my TP is gonna be. So already that's where I'm placing my buy limit, and probably it's going to be mitigated either tomorrow, later tomorrow. And these guys, it's just my stop loss. I'm using just a daily demand to avoid the lower time frame issues of here and there. So my stop loss, as you can see, at 3 pips, 0.9, that's just around 84 pips. That's where I'm placing my stop loss, and I'm bullish. And that's why I see that the 4 hours time frame on this Euro USD seems it has failed to hold. As you can see, this is a level. It has been violated. So if it has been violated, let's continue looking for sales here. And probably since the price is here, I don't see any sell position, because once it taps here, I'll be in a trade and I'll be holding my buy position. So technically and fundamentally, this is the setup I have, guys, and I'll make sure that I document this one until we hit our TP or until we hit our stop loss. So guys, yeah, thank you for being patient and for correction, accepting my correction on this one. And that's what will happen. So we are having here the euro, and you can see the euro how it's running to the downside towards that level. So if that was my, let me first look at Euro USD. How have I placed my stop loss? Because I need to have almost the same. Okay, working from the body. So let's go back here. Let's go back here. Here. So what was my stop loss? Let's take this. I'll put it here. Then I'll take a straight line. Okay, then take it here. Then again, I'll adjust my straight line here. Okay, my straight line when it's there, I just remove this one. And I know that that's where my stop loss is, that one is just correct. So that's where my stop loss is, and I'm going to be patient until the broker puts me in. So guys, that was my area of interest. And as you can see, even on 4 hours, the OB has failed to hold, and now we are approaching that level. So definitely today we're going to hit our entry, and I'm going to put my buy limit now, Euro USD direct straight away, and let's enjoy the ride, guys. So we're still bullish, nothing has changed, but we need to position ourselves well. So otherwise, guys, thank you for your time. If you liked the video, share, subscribe, and I'll see you around later, right? We'll make a video for the next pair, but this one is the one that I was looking at, focusing at, and let's see what will happen. Otherwise, thank you.